I said that Bitcoin was going down to 10K. So far, it's only dropped 75%, 10% shy of my 85% target. The price was 65K at that top. Now the price has been down to 17,600.
Richard Hart, founder of Hex, talks about the economy and his predictions on Bitcoin's future price movement.
I think we'll go down another 75% to an 85% total drop. I think Bitcoin will tap $10,000 from its high of 65,000 because that's what it normally does. It drops 85%. It made a 6% higher high Jewish candle that was bought on leverage. What happened was the market participants didn't want to do the normal blow off top with the 85% dump. They believed in the super cycle. And so with leverage, Michael Saylor took on leverage, Three Arrows Capital took on leverage. All these lending companies like Celsius, they also took on leverage. People don't realize it, but loans are leverage. You're doing stuff with money that you don't really have, right? Like you're just delaying the sell. And once the price drops low enough, you have to get liquidated. And then that's the real sell. So when you encumber your assets, that's the virtual sell. And when you get liquidated, that's the real sell. And so they bought a double top. It's the first time in Bitcoin's history it's ever done a double top. And now Michael Saylor's at a loss. Michael Saylor, the guy who everyone gave their money to, the opposite of why Bitcoin was invented, they gave their money to Michael Saylor, who maybe can buy Bitcoin with it, maybe not. It's really up to him. It's not like the Bitcoin Investment Trust where they have to buy Bitcoin with it. He can do whatever he wants with the money, I think. Check the docs. It's not a trust company. And by the way, his coin went down 90%. His MicroStrategy Inc. went down 90%. Coinbase's stock went down 90%. Hex, after a 95% dip, is still up 250,000% from January 5th of 2020. All those guys have to get liquidated. That double top that they bought delayed. So we could have already dipped down to 10K and been going back up. But instead, they bought a fake new high. They got everyone that's a breakout trader wrecked when they bought this slightly higher high of 6% from 65 to 69. And then it went down to 17,600. And now Three Arrows Capital is liquidated. He's got more followers than me. He's bankrupt. This guy, Raul Paul, who was irresponsibly long Ethereum, his words, the largest trade of his life, all his options he bought expired worthless. I told him, ladies, liquors, and leverage is how you get wrecked. That's how smart people go broke. Ladies, liquor, and leverage. Michael Saylor took on leverage. He's down, I believe, 30% on his Bitcoin stack. The government of El Salvador is down. ARK Invest, down. Everybody's wrecked but me. I called the top on the day. I've been in this market since 2011. My price calls are amazing. I make very few of them. And that's a lot easier to get it right when you're not getting chopped up by just noise. So zoom out, longer time frame stuff. When hasn't Bitcoin done an 85% drop? It always does. It always has. Why would it stop? Everyone thinks this time's different. Nope, this time's not different. Institutional money's here. Yeah, they all got wrecked. As a matter of fact, ARK Invest that bought Coinbase at 250 just dumped most of their holdings at 50. So that lady got wrecked. I'm surrounded by wrecked fools everywhere that have more followers than me. It just drives me crazy.
Richard explains how Bitcoin may react during a recession.
Bitcoin is directly correlated with the stock market. The stock market is inversely correlated with interest rates. As interest rates rise, stocks go down. As stocks go down, Bitcoin goes down. When Bitcoin goes down, most other cryptocurrencies go down as well. So it's like, as long as they're raising interest rates, stocks will go down, consumer spending will go down, especially luxury goods. I called the Rolex. I've got $10 million of watches. This is $1 million Rolex Daytona Rainbow. I called the top on the day. So this was $1 million watch. Still is $1 million watch, but if you really bargain hunt it, you can get this for $850 right now. There's one for sale for $850. Here's the thing that people don't understand. If the investment that you have drops 20%, but all the stuff that you want to buy drops 20%, you broke even. If the investment that you had went up 20%, but all the stuff you want to buy went up 20%, you broke even. And so what really matters is the ratio of what you're holding versus the stuff that you want to buy. And so when I see figures come out of the government, a funny quote is that figures don't lie, but liars figure. I don't believe their statistics. I don't think inflation is as low as they've been saying it is. And I don't really care about this GDP growth or not growth. It's too weird and too wide. And how does that affect me? I care about Ferrari prices, Rolex prices. I don't know what a gallon of milk costs. I'm too rich to care anymore. But I care about what luxury goods cost. And I care about what crypto costs. Because when people talk about stocks, look, Ethereum went up like 16 or 17% today. X is up 20% on the week. Why would anyone care about stocks when you've got the gains available in cryptocurrency, the best performing asset class that's ever existed, that can put you truly in charge of your money? with no middlemen, no counterparty risk. Now, a lot of people don't use it that way. They give their keys to someone else, so I beg them not to. Whenever people ask me about, oh, should I mortgage or rent? I'm like, who cares? Crypto. Rent, crypto, because the bottom will be found. Eventually they will, after they've raised rates for long enough, eventually they'll start printing money again. And when they do, all the risk on assets are going to shoot right up and crypto is going to shoot up the hardest. As far as drops go, people screw this up all the time in crypto and it drives me wild. They hide. Remember how I said figures don't lie, but liars figure? Here's this misleading garbage that I see from the media and the idiots in the cryptocurrency space constantly. They talk about the drops. Bitcoin dropped 75, Ethereum dropped 85, Hex dropped 95. To any new person, that sounds like a terrible investment. But wait a second, how much are they up? I don't know. When I was mining Bitcoin, they were 50 cents. When I bought Bitcoin, it was $30. Now they're $22,000. But what about that 85% drop? Let's take a 90% drop. A 90% drop only cancels out a 10x. So if you go up 10x and drop 90%, you're back where you started. Hex went up 10,000x. And so if it drops 90%, it only cancels out 10x. It did a 10,000x. Bitcoin did a 690,000x. Ethereum did a 14,000x. Actually, I think Bitcoin did a 69,000x. It only went up 690 million percent. So it went from, let's say, a penny to 69,000. So it'd be 69,000 times 100. I'm the guy that popularizes the 85 and 95% dips because they're on the chart. Volatility is the price you pay for the best performing asset in history. If you have a very short time horizon, you can get wrecked in any speculative instrument. I mean, what? Amazon's down 20, 30, 40, 50%. Is Amazon a scam? Amazon went down 95% in the year 2000. Is it a scam? No. Volatility is a function of the humans. The price volatility is not something you can program away. It's humans thinking something's worth more, and then they think it's worth less. It has nothing to do with the actual product. It has nothing to do with the coin. It's a function of human psychology. They want it when the price is going up, and the price goes down, they want to sell the bottom. That's the trick with crypto, is if you bought Bitcoin, Bitcoin is now roughly the same price that it was 5 years ago. So you could have bought Bitcoin for $20,000 in 2017 at the end, which is basically 2018. Or you could buy it for 22K today, or a week ago, you could have bought it for 20K. So you waited 5 years for the same price. Same with gold. Gold's the same. Gold's cheaper now than it was 10 years ago. So with gold, you got wrecked. With Bitcoin, you got wrecked if you bought the previous tops on either of those things. But if you look at a longer time horizon, why would you care about an 85% dip and not look at it as an opportunity when these things go up thousands, hundreds, tens of X? So yes, Bitcoin has dropped 85% 3 or 4 or 5 times, but it went up 690 million percent. And so people always leave out the how far up, even Dogecoin, right? Dogecoin is bad technology. It's just a meme. It was literally invented as a joke in an afternoon, literally. And you're still up massively compared to Bitcoin, even after it dropped 85%. But people are too stupid to zoom out and go back and look at the history.
Richard explains what may happen to cryptocurrency when interest rates start going up.
I think as far as prices go, they will eventually stop raising rates. When they do that, it's going to let all the risk on assets start going up. Crypto will go up the most.
Okay.
As long as you have a 30% discount on Grayscale Bitcoin, which holds 3% of all the Bitcoin, you are not going to get a bull market. And right now, the Grayscale discount is 32 or 33%. So you can give Grayscale money for fake Bitcoin, but they really hold it. They really have it. It's encapsulated. You can't redeem it. Grayscale is a trust company that holds 3% of all the Bitcoin. They've got like 100 and I don't remember how many coins, but it's 3% of the total stack. Maybe it's like 270,000 coins or something. And they've got a trust company that holds them, and they charge 2% override fee a year. So they make $600 million a year net just sitting on everyone else's Bitcoin, which is a pretty good deal for them. And you can buy shares in their company that don't give you any right to the underlying Bitcoin. And usually their stuff trades at a premium as well. Usually it trades at like 20% premium historically. So this 30% deficit's the highest it's ever been. 34.07, I think was the max so far, maybe a couple months ago. So now my thesis is, how did they get 3% of all the Bitcoin? Because Legacy has so much money to shove into their regulatory arbitrage publicly traded vehicle on OTCQX bulletin board. And there's a lot of people with their LP agreements that are restricted, that they can't just buy currency and they can't just buy speculative stuff, but they can buy a stock. So that's why there's so much money in Grayscale, because there's a lot of companies that want exposure to crypto but can't get it any other way. It sounds like I'm giving a Grayscale ad here. Listen, guys, if you're giving someone else your money, that's the opposite of why crypto was invented. Crypto was invented so that you hold your own keys and there's no middlemen and no counterparty risk. As long as you can buy Grayscale, quote, Bitcoin shares in the Grayscale company that holds 3% of all Bitcoin for a 30% discount, and it usually trades at a 20% premium, money will go there. It won't go to spot, will keep dropping. And then you could literally see that deficit go lower than 30. It could go to minus 50. Like you could get Grayscale encapsulated fake Bitcoin for 50% off. The price of spot could go down at the same time.
Richard explains if he still thinks Bitcoin will hit a low of 10K.
10K would have been the bottom with a 65K top. That would have been an 85% dump. But since we went up another 6%, that moves the bottom up, I believe 6% to 10,350. I say 11K because it's just easier to hit and people like to front run my calls. And so it's just easier and safer to hit it. But really, because the dollars are for the first time becoming more valuable, you see the DXY at 20-year all-time highs. So the dollar is at 20-year all-time highs versus all the other fiat currencies. Isn't that weird that if you thought that the dollar sucked because everything got more expensive, imagine holding one of those other fiat currencies.
Richard then goes on to describe some of the big players in the crypto market and some of the risks associated with them.
You can only get 13 Ethereum for Bitcoin now, by the way. You used to get 2,000. Bitcoin wrecked. So a lot of these large entities in Bitcoin are true scumbags. So for instance, when I told you that Grayscale holds 3% of all the, that's the opposite of why Bitcoin was invented. That is a centralized counterparty that can choose to just not pay you. And then there's a website that tracks all these like industrial entities that bought big Bitcoin bags, and they have 7% of the total. And so Mt. Gox holds 141,000 Bitcoin. What's the only thing they can do with them? Sell them or give them to other people that will probably sell them. That's it. How did they get those? Through fraud. The guy ran a fraudulent fractional reserve exchange that got hacked and had huge errors. And then, so he's got 140K. The guy already dumped, he used to have 280. He already dumped half of it. So that guy was dumping back when Bitcoin was 10K. He was helping push the price down to 3K in 2018. Who else has lots of Bitcoin? Oh, the Bitfinex hacker. He had 70,000 Bitcoin. And now the United States Department of Justice is trying to sell them, apparently, instead of giving them back to Bitfinex where they came from. Because, hey, I don't know, maybe the DOJ doesn't like crypto, I don't know. And then who else has a bunch? Ross Ulbricht of the Silk Road fame. Don't even know how many of the government seized from him, but they want to sell his stack too. When I say 70,000 Bitcoin, do you know how much money that is? That's $1.5 billion. So the Bitfinex hacker was sitting on $1.5 billion. The Mt. Gox people are sitting on $3 billion. And these are all going to hit the market. And if they don't hit the market, they'll go to individuals that may hit the market with. This is all very bad for Bitcoin. You believe in supply and demand, this is a lot of extra supply.
If you found value in this video, please like the video and let us know what other topics we should make a video about next.